Do you have a do you have a light on your camera?
I opened up the window.
Okay. It's like you're the chosen one.
Well, without it, it was really dark.
Oh, okay. Did you just emerge from the river in the arms of John the Baptist?
All right, this is episode 45, and today we're talking about if Biden should lift Chinese tariffs, why commodities are down, and we have more lightning round questions at the end. President Biden is contemplating rolling back Trump-era tariffs on $300 billion worth of Chinese imports as a way to fight inflation. Yet some believe that the economic benefit gained from doing this is not worth letting China off the hook for unfair trade practices. Drew, what do you think?
I think Biden should roll back the tariffs on China. The Trump administration imposed these tariffs in the first place for three main reasons. One was to benefit the American workers. Two, to give America some leverage when it comes to renegotiating some trade agreements with other countries. And three, they wanted to protect national security. So I think the question boils down to, did the tariffs actually work? Did they achieve what they sought out to do? So if we examine how the tariffs affected the American workers, yeah, I think tariffs benefited some workers, but only the producers of specific goods covered by those tariffs, such as steel products and washing machines, refrigerators, things like that. Now, this is only one sliver of the economy. We have to consider how tariffs affected workers in import competing industries. Workers in factories that used imported goods basically got shafted in the trade deal. Also, the effect of countries retaliating and placing tariffs on U.S. exports is certainly harmed the jobs of those exporting industries. And not to mention, the American consumer didn't really make out too well. So two, did the tariffs result in better trade agreements with other countries? Again, if you look at the outer layer of the onion, it may seem so. It helped bring some unlikely partners to the negotiating table, but I don't think it actually resulted in any substantial gains or better trade deals. And also, I'd argue that it probably pushed other potential trade partners away that didn't want to get into the middle of a nasty trade war in the first place. Finally, did the trade tariffs improve American national security? This one's kind of murky. I'm not really sure. I think it's tough to measure. But even if our national security index went up, correlation doesn't always equal causation. And I think that there's better tools for improving national security than through tariffs. So basically, tariffs is like America cutting off its nose to spite its face. Yes, tariffs hurt China, but I argue that it hurts Americans more. So if we want to reverse a recession or avoid a depression, or at least help get inflation under control, I think rolling back the tariffs would be a good move.
So I'm going to take the exact opposite approach. No big surprise there. So I would say absolutely not. Number one, to me, this just screams a short-term solution to try and get the CPI number to level off in time for the midterms. In broader terms, not just Chinese tariffs, but we have a president right now that is willing to go anywhere and do anything except here in America to try and solve these problems. We're contacting like countries like Venezuela, Iran, the Saudis to try and increase oil production, but we're totally unwilling to do so here at home. We're talking about rolling back tariffs on a country like China, but not engaging in policy making that would increase supplies of these goods and services that we need right here at home. Basically, to me, this is an attempt to try and wave his hand to make inflation go away, and it would be a short-term solution. But in the long term, as we've seen over decades now, we look at all these different trade deals: KORUS, NAFTA. KORUS is the Korean trade deal. NAFTA, permanent normal trade relations with China. They're all promised on the basis of like millions of new jobs and significantly lower consumer prices, and virtually none of these promises ever really come to pass. The only promises that actually do come to pass is businesses make a little more money. So from an American labor standpoint, it's really There are obviously some workers that benefit, but the data tends to show that most middle class, especially like blue collar workers and like working class Americans, tend to be hurt by these things. And it's not just, trade with China. It's like I mentioned with energy. In a totally different respect, though, the United States is incredibly stupid to do business with China at all. Every boatload of stuff we buy from China, some of that money builds a tank, a bomb, a plane, a ship that's being purpose built to invade countries or deny the United States access to areas that the United States, in many cases, is treaty bound to defend. It is incredibly stupid to do business with a country that seems intent on one way or another getting into a conflict with us, or waiting us out and then doing whatever they want to their neighbors. Personally, I think doing business with China is incredibly dumb for a variety of reasons. I do not think that we should be engaging with a nuclear armed, self-proclaimed communist adversary to get the CPI number to level off.
The last time we discussed trade policy, Alex and I basically took the gloves off and had a bare knuckle brawl. And so I'm kind of enthusiastic about doing the same today. Philosophically, I tend to fall in the Austrian school of economics camp, which tends to say that any barriers to trade is generally bad for the citizens of your country. If you think about it this way, is that what trade tariffs are is it's like the neighborhood kid comes over and abuses your cat. And so what you do in retaliation is you punish your own child because of what the neighbor's kid did. So what tariffs essentially are is it's raising the price of goods in the marketplace for your own citizens. So let's say that American goods are more expensive and Chinese goods are less expensive for the American consumer. The Chinese are misbehaving. So what we do is we punish American consumers because we're mad at the Chinese. And the argument is, well, the Chinese, they essentially subsidize their industry. They use government to give the private industry an upper leg. And I'm like, hey, if they want to tax their people into oblivion so that they can sell cheap stuff to Americans, I salute them with both hands. In a game of attrition, a country cannot go on forever violating its own citizens to sell cheap stuff to Americans. If that's what they want to do, I'm all for it. So philosophically, I'm not a big fan of the tariffs. I understand and appreciate that from an American perspective. We really believe in fair play, and we are aghast when people don't come to the marketplace and play on a fair level playing field. But the reality is that long term, any barriers to trade generally hurt the very citizens of the country that implements them.
If he does lower the tariffs on Chinese goods, like the $300 billion worth of Chinese goods, he's basically the Phil Mickelson of golf. Is that Saudi Arabia rates you a big fat check and you go play for them, and if the Chinese are like, hey, we'll lower your CPI by maybe 26 basis points, that might filter out to like 1% over a year, and you go ahead and do it, you're basically the Phil Mickelson of golf. Because the thing is, like, while I'm not a huge fan of tariffs, is that America's got itself in a position right now where they're there. And if he just goes ahead and be like, whoops, America got itself into a little bit of trouble here, we're going to go ahead and take these tariffs away and not get anything out of China, for lowering those tariffs, then basically you just lost the trade war. And the Chinese have not been doing their part to buy, X amount of U.S. agricultural products that they said they were going to do. So they haven't even been playing by the rules that they agreed to, back in 2019 when Donald Trump was still in office. So if he's going to get rid of them, is that you need to get something out of China, so that way you don't just look weak to the rest of the world.
When I was a kid, there was a TV show called I Love Lucy on. It was a black and white television show. And one of the episodes, Lucy and her best friend, next door neighbor, I can't remember her name, Ethel. I think her name was Ethel. they both went into the hamburger business as partnership, as a partnership. They had this hamburger stand like a McDonald's. And they ended up having a falling out. And because they were 50-50 partners, what they ended up doing was running two different hamburger companies in the same store. So somebody would come in, a customer would come in to buy a hamburger, and Fred and Ethel would say the hamburger is 10 cents. And then Desi and Lucy would say, no, it's 8 cents. And then Fred and Ethel would say, well, no, it's 6 cents. And then Desi and Lucy would say, well, no, it's 2 cents. And then Fred and Ethel would say, well, it's 1 cent. And then Lucy and Desi put a sign up and said, go buy your hamburgers over at Fred and Ethel's. The point is that at some point you can't continue to do this sort of trade war stuff forever before you end up capitulating and just, going under. So I think the American economic machine is so strong that we can just outproduce. And in a war of attrition, I think we can win with the Chinese without doing all this trade barrier stuff.
Yeah, I mean, if people like Peter Zion are to be believed, I mean, you can just wait. Supposedly in the next decade, China's going to have a ton of issues on its hands. So
to a certain degree, this is how we destroyed the Soviet Union. Is that we just ramped up production to the point where they just could not keep up with us in the strategic arms race. And they spent so much money on defense, and it made up just a percentage of our overall economy that they couldn't keep up, and they just capitulated.
All right, move on here. Is that all right? Since the pandemic, commodities prices have shot up to some of their highest prices on record. However, over the last month, we are starting to see a lot of those prices come down pretty substantially. Gold is down about 6.5%. Oil is down about 17%. Copper's down about 23%, and wheat's down about 27.5%. Drew, what do you think's going on?
I think commodities are just being commodities. We have to remember that buying corn futures is not like buying shares of Coca-Cola. Commodities can be extremely volatile, and they're extremely sensitive to changes in the supply and demand. It all stems from where the state of the commodity market is. If there's huge inventories of gas and oil and precious metals and agricultural products, and they exceed the demand for these goods, then the prices are going to drop. But if the demand is greater than the supply, then the prices are going to skyrocket. Also, commodity prices can be largely affected by just investors staring at computer screens. They're all looking at the same charts, and these price charts can produce a herd behavior in investors, and massive trades in these investments can cause prices to fluctuate wildly. And lastly, these commodity prices are sensitive to changes in the geopolitical landscape and macroeconomic landscape. Conflict between trading nations and things like that can certainly throw a wrench in stable prices. So for right now, commodity prices are going down because we have producers that have very little incentive to produce. We have trade tariffs on exporting countries, and we're witnessing war and conflict overseas. Certainly a good environment for some volatility in the commodities market.
So from my standpoint, looking at some of these, some commodities are declining, others are hanging out at or near their multi-year highs, and some are getting a little more expensive. But it really depends on what commodity we're talking about. If we're looking at oil, so recently French President Macron was caught on camera by the press talking to Biden at the G7 summit in Europe. And what he said was that the Gulf states, for example, are maxing out oil production. And with that combined with, so Biden releasing a lot of barrels of oil from the strategic reserves is putting a lot of oil into the market. And while the strategic reserves can't, be kept open forever, when the Gulf states are maxing out production to try and keep oil prices from getting past 110, 120 a barrel, and then you start seeing all these recession indicators going off, all of a sudden you start seeing inventories build up again, more supply, theoretically lower demand, prices go down. But if you're looking at like housing stuff, for example, so lumber, copper, steel, materials that go into like construction, a lot of these are declining because we saw the last month I saw data for new housing starts declined like 7% month over month in the United States. And new mortgage applications dropped to a over 20-year low. So you're starting to see all these like construction companies scale back on orders, but they have inventory already because they've been buying as much as they can. So again, you've got, inventories building because all of a sudden with rising interest rates, demand is collapsing for new and existing homes. But food, on the other hand, some food is going down, but even still, wheat is up 30% year over year, cheese over 30% year over year, oats is like 75%, potatoes, soybeans, corn, all still 10, 15% higher than they were a year ago, even with their recent price declines. And then in food, even if things are kind of calming down a little bit, people are very concerned that because of like a fertilizer shortage that's coming, as well as a significant amount of Russian, Ukrainian, and Belarusian wheat that's probably not going to be getting out of the country any of those countries later this year. We're going to start having some problems later this year and early next. Because right now, everybody around the world is eating either the Northern Hemisphere's previous fall harvest or the Southern Hemisphere's, for us, it would be spring. It's their fall. 2022, their fall harvest. When the Northern Hemisphere goes to harvest this fall, well, Ukraine is kind of busy, and so is Russia, and so is Belarus. And a lot of those countries in the Middle East and North Africa are going to start seeing some real problems with food. And then come spring, when you have the Southern Hemisphere's harvest, throw in all these, increased prices in fertilizer and other, agricultural inputs, and you're potentially looking at famine. So I look at in food that, and sorry if I'm going on too long, but in food prices, I look at this as the calm before the storm. So again, it just kind of depends on which commodities you're really looking at.
We've got a 30-minute show, and this is a 2-hour discussion.
Yeah.
But there's a variety of different commodities, and they each will react to economic events in different ways. The reason why gold prices are down is because the Federal Reserve is promising to raise interest rates. You don't get any interest income from gold. You get capital appreciation and capital loss from gold. But if the government continues to promise higher and higher rates of return, you're going to see incrementally investors moving towards bonds and away from gold in order to fulfill the certainty of their portfolios. Comes oil, investors and speculators are believing that the economy is going to slow down, so the demand for oil is going to be less, so they're not going to pay as much for it. For farm goods and that sort of thing, same thing, that people are looking at future prices, and folks are not going to be investing in things that might be worth less in the future. And then finally, on a real macro sense, during the COVID lockdowns, the federal government, if you think of US dollars as being air and the economy being a tire, is that they put $6 trillion worth of pressure into that tire. And what they did is they overinflated the tire so that a tire is supposed to have 35 pounds of pressure in it. It's got about 50 pounds of pressure in it. And the Federal Reserve is trying to let some of the air out of the tires. Right now, the tires should be at 35, and we're probably at 45 right now. So the air is coming out. It feels like there's a drop in pressure in the economy, but those dollars should never have been in the economy to begin with. See, the federal government very rarely hits the mark exactly where it wants to be. It's like a pendulum. They put too much money in the economy and we suffer from inflation. And then they take too much money out of the economy and we have a recession, and it swings from one extreme to the next. And it's always fun to be here. It's never fun when the pendulum is swinging in the other direction. And that's exactly what is happening right now.
Yeah, Joe's right there. Yeah, there's a myriad of things going on in the economy. Is that you basically had a whole bunch of demands accelerated in 1 year. You have the war with Russia and Ukraine, which is putting a lot of pressure, or a lot of setting wheat prices. I mean, they were up right when the Russia-Ukraine war started. Wheat prices were up about 50%. They're down about 27.5%, coming off their highs right now. And I couldn't tell you what they're going to do, next fall, like Alex said. And then also you have the dollar has been gaining strength relative to other currencies, which makes commodities from the U.S. More expensive to purchase. So yeah, commodities, like Joe says a lot of times that they're like bottle rockets. It's incredibly hard to predict where they're going to go. But when you get recession indicators and you get demand falling off, it's not surprising that you're going to start seeing some of these prices fall down. And then also, producers have been scrambling to increase production, during the pandemic, and just now they're starting to be able to deliver the finished goods that people have been demanding, and they're starting to see that demand fall off. So obviously they're not ordering as many of the the unfinished goods as they were. I will say it's interesting to see is that in Bloomberg on July 1st. Ran a story that says J.P. Morgan sees stratospheric $380 oil on worst case Russia cut, and then 4 days later, so on July 5th, so yesterday, Citibank warns that oil may collapse to $65 a barrel by the end of the year. So I saw this on Twitter this morning, but it's good to see that the investment banking industry has a good consensus on where oil is going to be by the end of the year.
Yeah.
So, one company predicting $65 barrel in oil, and the other predicting 380. But I think that's just a testament to how unpredictable commodities are.
Experts.
Exactly.
Yeah, and the Biden administration is modeling for 200 by the end of the year. So
right. Yeah. So it's just all over the place. It's pretty ridiculous. Okay. All right, we'll move on to the lightning round. All right, statistically, one of the most popular months to get engaged is the month of November. However, because purchase of the actual engagement ring happens a few months before that, I've been starting to get some questions from clients, and I've also been starting to see it on some of their annual expenses, the amount that they're planning on spending for an engagement ring. And I've also been getting a lot of questions on what the appropriate amount is to spend on an engagement ring. So Drew, what do you think? What is the appropriate amount to spend on an engagement ring?
Whatever you can afford to buy with cash.
yeah, that's the long and short of my answer is whatever you can afford. But in general, if your future wife is going to wear it all the time, every day, maybe you'll splurge a little bit on it. If it's going to be worn until the wedding ring comes along and then sit in a box for most of the time for the rest of her life, maybe not so much money.
If your fiance puts pressure on you to buy a engagement ring you can't afford, that is a recipe for future disaster. I concur with what Drew said. If you can't pay cash for that engagement ring, you ought not to be buying it.
Yeah, no, all good points. Is that, and then I don't know what the cash limit on the engagement ring would be. I do know I spent about $1,000, like 10 years ago. I spent about $1,000 for my wife's engagement ring, and it's held up pretty well. So I've been pretty happy with that. I don't know what that is. After you figure that for inflation, probably like 5 or something like that. But yeah, I don't want to put a price on low though.
Yeah.
The old rule of thumb, it was 3 months salary. That kind of the benchmark.
Is that what it was? I've never heard that.
That's what Zales Jewelers used to tell people.
Oh, really?
Now, is that net or gross?
I'm sure it's gross.
Can you itemize deductions?
Yeah. I've also seen some insurance policies on the wedding rings. I saw an insurance policy for a $10,000 wedding ring, and it seemed appropriate. I mean, you're probably going to want to insure that thing in case drop it down the shower or something.
Yeah.
I remember at my when I got commissioned into the Marine Corps, it was the same day I graduated from college, and we were sitting in the commissioning ceremony, and one of the guys that I was in the ROTC unit with, his fiance was flashing her engagement ring and explaining how expensive it was, and she kind of looked over at Linda, my wife's wedding ring, and it wasn't anywhere near as nice as the one that the other young lady had. Well, that was 37 years ago, and we're still married. And the other guy's marriage lasted about 18 months.
Are you trying to draw, is a correlation equal causation in this case? Is that what you're trying to say?
The less you spend.
So the cost of the wedding or the engagement ring is inversely correlated to the length of the marriage. Okay.
Yeah, that's it.
I would kind of like to get our wives' opinion on this one too.
Yeah.
I wouldn't.
All right. So yeah, it's summertime, and when Joe's not working on his farm, he's probably sitting on his beach in his thong reading a book. But Joe, what book? What's on your summer reading list for this summer?
I'll be honest with you. I started milking goats about a month ago, and that eats up a significant part of my leisure time. Most of my reading is actually watching YouTube videos on how to. I'm learning all sorts of new farming techniques every night, and that eats up most of my reading time.
Drew?
I really don't have a reading list per se. I have a lot of books at my house, mostly just so people might think that I'm smart if I don't talk. But once I finish a book, I'll go and select one from the shelf. I don't really have a premeditated agenda of what I'm going to read next.
Alex?
So mine right now is consisting of, if anybody out there has kids, you probably know what Bluey or Puffin Rock are. My daughter is obsessed with those shows, but we don't want her to be watching TV all the time. So we bought books that are basically novelizations of episodes of these shows. So we read her the books of like Bluey and Puffin Rock and a couple other kids TV shows, so she gets some reading. So that's basically all I'm reading these days.
Nice. Yeah, I do most of my reading in my commute to and from work. And right now I'm reading Ken Fisher's Markets Never Forget. And then on weekends, I usually change it to, I'm rereading Trekonomics. You know, it's kind of the case for how, a Star Trek economy could actually come to life. And they make some pretty glossy leaps in that book, but it's always fun to read. That's about it for me. All right, every 4th of July, Nathan's Hot Dogs hosts the National Hot Dog Eating Championship on Coney Island. This year, Joey Jaws Chestnut won by eating 63 hot dogs in 10 minutes. Joey also took out one protester while consuming the hot dogs. How many hot dogs and protesters do you think you could take down in 10 minutes, Drew?
Independently, I think I could probably do a protester and maybe eat about 6 hot dogs. But together, I don't know if I could succeed at either. That's pretty awesome with him.
Alex?
So I looked at this from how much does an 8-pack of Nathan's hot dogs weigh and how much bread is in 8 hot dog buns. And then I compared that to like a big plate of barbecue at a restaurant. And it's like, yeah, it's about the same. So I think I could probably eat an 8-pack of hot dogs and buns. Maybe not as fast as 10 minutes, but if I'm hungry, it might be. Otherwise, I might be able to get a protester. But that is all dependent if they're not bigger than me. If they are, then I'm probably screwed.
Well, if it was the kind of protesters that were taking down Joey, I could probably take 3 or 4, but I probably could only eat about 2 hot dogs in 10 minutes.
I was gonna say is that I think I could probably do 2 or 3 hot dogs maybe in 10 minutes, but the fact that I'm a short guy, 5'6", so like Joey basically just reached around that guy's head and took him down. I'd probably have to expend a lot more time trying to take down a protester. When I wrestled, I had to work from the ground up. So it'd probably take me some time, and then also being able to expend all that energy to take down a protester and keep. I think he had 15 hot dogs in him at the time. So to spend all that energy and not give up your hot dogs, I thought was pretty impressive. That's a testament to a true athlete right there.
Well, actually, I think he had an unfair advantage. He basically jumped from bantamweight to heavyweight in like 3 minutes.
Yeah. That's true. Yeah. There's a lot of force coming at you. And also, I don't know what happened in Joey's life, but watching the video of him, which I'll throw up on the screen here, of taking down that protester, there's a lot of rage in that young man's life. I don't know what caused that, but it was pretty violent.
It deprived him of his livelihood.
Yeah.
I thought the guy died. Like he twisted his neck like a ninja or something. It was intense.
Yeah, Joey needs that 40 grand. So, all right. Well, that's it for episode of 45 of Farm to Markets. We'll have another one for you next week.